So here's another example of the Biden administration essentially destroying the country and taking those who are responsible, productive, good members of society and punishing the good people and rewarding those who don't pay their bills on time, are criminals, um, and are basically degenerates. So here's a new rule that's going to be put into effect where those who have good credit scores and put high down payments down on purchasing a home are now going to have to subsidize those who are high risk borrowers who have bad credit scores and don't pay their bills. So Fannie and Freddie Mac, for those of you who don't know who that is those are quasi-governmental agencies. And the reason I'm bringing this story up is I, in a past life, owned a mortgage company. So I understand how a lot of this stuff works. And I also am privy to, during the time that I was in the business, is when we had our last meltdown starting in 2008, 9, and 10, for the exact same reasons that are going to happen here with these types of changes, where we were giving loans to those who not only didn't have an ability to pay, but a willingness to pay their loans. And we're doing the same thing now. But not only are we just giving, instead of just giving loans to people who are undeserving, we're subsidizing those loans by charging additional fees to those who are responsible and who do have good credit. So Fannie and Freddie Mac, these guys purchase all of the conforming loans that banks write that are within certain types of guidelines. So they're going to enact changes, and they're calling these fees loan level price adjustments. And this is going to happen on May 1st, which will affect mortgages originating from private banks like Wells Fargo, JP Morgan, and other banks. So a lot of these banks that do these loans end up selling these loans to Fannie Mae and Freddie Mac. The tweaks could further complicate the strenuous mortgage application process and add more pressure on the core segment of buyers in a housing market already in the midst of a major downturn. The average 30-year mortgage rate is now 6.27 as of last week, up from about 5% 1 year ago. Under the new rules, high credit buyers with scores ranging from 680 to 780 will see a spike in their mortgage costs, with applicants who place 15 to 20% down on their payment or on their mortgage experiencing the biggest increase in fees. So those who have a large amount of money down, and the idea of putting more money down is to essentially say to the bank, hey, I'm putting a lot of my own money into this loan. So by putting more money down, like 20% as opposed to 5% or less, there's less of a likelihood that you're going to walk away from that loan, because there's more of your own money out of your bank that you work for that you're going to be walking away from if you default on that mortgage. But now you're being penalized by the Biden administration to do that, as well as have high credit scores. This is complete opposite world. And this is what blows my mind is there's things over and over and over again that the Biden administration does like this, and people continue to vote for these people. Like those of you who voted for Biden, this is what you're getting. So those of you who do have good credit, who are liberals, who voted for Biden, I hope this affects you. I really do. Because we already have, it's going to be really difficult to get a loan right now anyway. Banks are puckering up like crazy because we're in for it. It's going to be bad. And then you're just going to add this to it. It's just going to disincentivize those who have good credit and have a lot of money down. They may very well just end up paying cash or find a different way of financing their loans. It's just going to make it a much worse situation. Under the revised LLPA pricing structure, a home buyer with a 740 FICO credit score and a 15 to 20% down payment will face a 1% surcharge, an increase of 3/4 compared to the old fee of just 1/4. 1% on a loan amount is a very, very big number. When you're talking about, having to put down 20% on a loan, you have so many fees that are involved in borrowing money. You have attorney's fees, title insurance, inspections, appraisals. You have thousands of dollars that you end up having to pay in closing costs, that a lot of those are calculated based on the loan that you're getting. And a lot of these loans are up there. They're, $300,000, $400,000, $500,000 or so. So when you're talking about a 1% on that amount, those are significant numbers that people who've saved all their, for a very long time and worked very, very hard on their credit are now going to be penalized and punished for doing so, in order to help those who are basically didn't care about their credit. I'm sure there are some people that have had hard times, and I understand that. But typically when you have those types of people with those bad credit scores, it's a pattern of behavior that's been going on for a long period of time, not just a recent setback that they've had. And now they're just going to be, they're going to get discounts. When absorbed into a long-term mortgage rate, the increase is equivalent of slightly less than a quarter percentage point in a mortgage rate on a $400,000 loan with a 6% mortgage rate. That buyer could expect their monthly payment to raise by about $40, according to calculations by Stevens. And again, that when you get into debt to income ratios, which they're going to talk about a little bit more in this article, especially with higher mortgage rates, a $40 payment, and I guarantee you it's going to be more than that. $40 seems like a very low number to me. I would say it's more three figures that you're going to be looking at in these payments. This could make or break somebody's loan. This could make or break whether or not they can afford to buy a house. Meanwhile, buyers with credit scores of 679 or lower will have their fees slashed. That's nice, resulting in more favorable mortgage rates. For example, a buyer with a 620 FICO credit score with a down payment of 5% or less. So that's the riskiest of the risky. They get a 1 3/4 fee discount, a decrease from the old rate of 3.5 for that bracket. They get a discount for having crappy credit and a 5% down payment. And like I said before, you put down 5%, you're more likely to walk away from that loan because you only have 5% of your own cash in the deal. These are supposed to take effect on May 1st. The fee structure changes are the latest in several moves by the FHFA aimed at boosting affordability for what the agency calls mission borrowers, defined as first-time home buyers, low-income borrowers, and applicants from underserved communities. In other words, this is their term. They want to make it sound as if these people are underserved and they're deserving of loans as well. All you're doing is you're allowing people who have bad credit and low down payments to be able to benefit off the backs of those who have good credit and high down payments and are savers and are responsible. This is a replica, but in a different way, of what happened in 2008, 9, and 10. And those of you who voted for Biden, thank you. Thank you for doing this. Thank you for being so self-aware and really paying attention to what's going on in the world, to where you're literally going to end up repeating the same mistakes that we did in 2008, 9, and 10 by just handing out mortgages to people who will never repay them because they don't have the willingness and they don't have the ability to repay them. And this is just another example of what's going on in this administration, to where we are, everything is just, turning to absolute trash. We are giving the lowest common denominators of our society all of the benefits. And meanwhile, those who are productive in society and responsible in society are the bad ones. And this is what people voted for. And, this thing that's going on in Chicago, which I'm going to go over in another story, is another example of you get what you vote for. And this guy is blaming businesses not paying taxes for the crime that's going on in Chicago. I'm telling you, we are voting for the dumbest, the lowest common denominator, and the most degenerate people in office right now. We have the worst of the worst in public office across everything, president all the way down. And it has to change. Otherwise, we're going to have another housing collapse. I mean, we already are going to have a really serious problem with commercial, because commercial property is in trouble. This right here that Biden's putting in is going to disincentivize those that are responsible from buying homes and getting loans, especially with interest rates rising like they are, and we're going to have a downturn already in the housing market anyway because of rising interest rates, and banks are starting to pull back. I mean, we see what's going on with banks right now. A lot of these banks are in trouble. So anyway, let me know what you think in the comment section. Be sure to like the video if you learned something. Also, if it's your first time here, please subscribe, and also go to DennisHendrickson.com. Either there, you can type that in, or DennisHendrickson.substack.com. Go there, sign up for free to get additional content, and you can also sign up and become a member. It's only $5 a month for content that you're not going to get on YouTube and Rumble. And also, be sure to visit me on Rumble as well. I've got a channel there, so just in case, because you never know what's going to happen with YouTube, you can search Dennis Hendrickson on Rumble and find me there, and subscribe as well. Thanks. I'll see you in the next video. Hey everybody, I'm super excited to let you all know that we are going to be starting our own nutraceutical company here very, very soon. In fact, we've already started it, but we're going to be launching a product very soon, vitamin D3. The company is Health Hive, and I'll show you a logo and show you Buster the Bee, who's going to be our mascot. And we thought that vitamin D3 would be the most important launch, or the most important product for us to launch initially, because of study after study about how important it is for us to get D3, how difficult it is for us to get sunlight, especially during the winter. A lot of us are indoors. If you're lucky enough to live in Florida like I am, you get a little bit more sun, but even so, I find myself indoors a lot, and I need to take D3 myself. I take D3, I take other supplements, and I figured, hey, why not create our own nutraceutical company? You guys can buy from us and help support the channel. I can take my own product rather than buy from somebody else. It's a win-win for everybody. So do me a favor and sign up at DennisHendrickson.com. You can become a free member there. You can also become a paid member at $5 a month and get extra content that you would not get on YouTube and Rumble. And if you're a member there for free, obviously you get all this great content, but we will also notify you as soon as we launch that vitamin D3. And of course, we're going to be launching other products as well as we go. But D3 we thought was the most important thing, so we're really excited about that. I hope you are too, and it's a great way to support the channel. So make sure you go to DennisHendrickson.com and sign up there, and we'll see you guys in the next video.